Alpesh once wrote a book called The Mind of a Trader, which I've never read it. Have you read it? Has anyone read any of Alpesh's books?
You can't promote his book. He's not here.
Okay, none of us have read the books anyway.
My books. I'm here. You can
Yeah. But your books are sort of novels.
I've got 7 investment books.
Okay.
On Amazon now.
He's got 7 investment books and some novels, but none of them are matters of fact. Right. One of the things that I don't understand about trading is that I think the statistics from IG are that 70% of people lose all their money within a year. Or is it 6 months?
Well, that's quite frightening, really, if you think about it. But you've got to ask the question, why do they do that? Is it because
they're trading? Most people, the way to make money is through long-term value investing.
Okay, but are they educated?
Numbers? The accurate numbers in Forex is 90 days. And in spread betting, it's 9 months.
So in spread betting, the average punter loses all their money within 9 months. Forex, it takes them only 3 months.
Yeah. All you need is leverage to lose all your money.
So with leverage and with the fact that they're trading and they're losing all their money, why does anyone do it? I mean, surely this makes you feel a bit nervous, Thierry, knowing that you're going to be wiped out in a few months' time.
No, it doesn't happen to everybody. So
it doesn't happen to everybody. Most people.
Some people can carry on spread betting for years and years and years. And whether or not they make money, I don't know. But I know some people who make good money from spread betting. And those people, in general, they make money because they don't take very high risk. When people talk about spread betting, they always think high-risk strategy. Well, that's not true. If you know what you are doing, you can make good money and also with limited risk. And I think this is where people must be educated. They must learn how to manage their strategy so that they don't take huge risks.
Your answer, we'll come to the aspect of risk mitigation later, is basically that the reason that nearly everybody loses all their money is that they take unnecessary risk.
Why? Because they gamble. I call it gambling. People will open an account, maybe £2,000 in the account, and they start betting £10 a point on the FTSE. So obviously, with the leverage effect, it's not difficult to be wiped out. Because the thing with trading is that profit don't come at a regular interval, okay? You can make money over the long term, but then you can go through a period of a month or two where you are going to lose money. And if you bet too much during that period, then your account could be wiped out. And this is what I'm saying. The way to last long in that business is to bet small, not risk too much money on each trade.
Clem? Well, a man who claimed last night that he'd made 400% since 2008.
Oh, that's in investing. In spread betting, that was the last 14 months.
All right, okay. So why is it that most people lose their money trading?
Because they think they know what's going to happen, rather than they know what's going to happen. And that's the difference. If you think it's going to go up, it probably isn't 50-50. If you know it's going to go up, it may well do so.
How do you know what's going to go up?
Well, it's a gold miner thing, right? The gold miner will tell you if you think it's gold, it isn't. And if you know it's gold, it is. And if you ever stand in the stream with a gold pan, you'll find out how that works. You think, oh, well, could gold go up? Oh, it might go down. Oh, it might go. No, I think it's going to go up. Oh, I read an article. Yeah, it's going up. You have no clue, do you? When you look at something, you go, bloody hell, that's going to go up, isn't it? That's kind of a different mindset. If you don't have any facts behind you, which is really where you should be, but you are speculating, well, you've got to know the difference between guessing and it being obvious to you. I mean, if you opened a spread betting account and put £2,000 in it and didn't use it until the day you went, oh my God, the dollar's going to collapse any minute now, then you would make money. But if you go onto your spread betting account and go, oh, is FTSE going up in the morning? Well, maybe it's going down, maybe it's going up. Oh, George Osborne not happy, I'll buy the pound. You will lose all your money, but remember, you only ever lose the spread because you're going to be right half the time, you're going to be wrong half the time. It's the cost that makes you lose all your money. It's not whether you're right or wrong, because if you don't know, you're just making it up, and it's a 50-50. It's your costs that take all your capital away. If you go to a speculator who tells you how he lost his money, you can just go to him, yeah, add up all your costs, that's how much money you've lost, isn't it? And they'll go, no, I was wrong on this one, but I was right on this one, and this one, and this one. And when they do go away, and I've had this conversation many times, they go, yeah, actually, the money I lost amounted to all the costs that I paid. And that's all they lose.
Is one of the reasons that people lose all their money that they simply overtrade?
I think partly is because they overtrade, but they're sold a dream often by education companies that trading is easy. You can come along for a weekend course and learn enough to be able to make a living out of trading. And what they've got to realise is they're competing with people who have done this for years and years and years, and they sit down and this is all they do every single day, and they've got every advantage that you haven't got. They're paying rock bottom prices for their trades, or nothing for their trades. They've got access to leverage, they've got access to research, they've got access to order flow in the market that you don't have access to. And they start trading and they don't have the skills that are required for the level of risk that they're taking on. The point Clem was saying that they lose the spread, I disagree. I think most people will lose money because they're not in an emotionally strong enough and capable state to be able to cut their losses and run their winners. They do the opposite. They cut their winners and they run their losses.
That's
and
not
their
the maths
losses.
behind it, I'm afraid.
I've worked for a spread betting firm in the past. I've been exposed to people, in a CFD broker, and their losses are bigger multiples times than the winners that they take.
That's gambler's ruin, caused by leverage, right? That's another mathematical principle.
It's caused by leverage, but they will ruin themselves whether they take leverage or not.
So what you're saying is when they take a position, they are more wrong than they're right. Is that what you're saying?
Well, they can be right 50% of the time, like you say, but
and wrong 50% of the time.
If they're invested in, say, a share, they might make 3% on the share, but they'll see it 30% offside. And they will take the 3% profit and think, it was a great trade. But they'll still be in it when it's 30% down.
So they've got knowledge, but they do it the wrong way around.
They've got knowledge, but they don't have the...
But they don't have knowledge, they're doing it randomly.
Yeah, they don't have the skills to be able to manage their risk on the downside.
I think it's the lack of understanding of the random walk that causes a lot of people trouble.
But also, I think it's also something to do with the stop loss. Because if you take a long-term investor, somebody will invest in the stock market and keep the position for years. That person hasn't got a stop loss. Now, with trading, because of the leverage effect, you need a stop loss. And the majority of people don't know where to place that stop loss. So the stop loss can make you lose money, if you know what I mean. Because somebody who invests for the long term will just keep his position. There is a dip in the market, it doesn't matter, he's still in that position.
You don't just need a stop loss either. I've been closed out by a spread bet firm. There was a lot of money still in my account, but they said over the number of trades I'd got open that the margin was all wrong, so they stopped me out without telling me on a complete glitch in the market that recovered a few minutes afterwards, but all my money had gone. That's the danger with spread betting. Avoid it.
Well, it could be oversold as well.
I used to trade the opposite of that because they used to push you out with your stops by pushing the market down on the sets book. Okay, so they know where the stops are. They go onto sets and they push it through those stops. And I would be right where the stops were and I'd pick it up, like they'd be doing. So therefore, you get closed out, they take your cash, and the market goes back. That's what a trader needs to do. He needs to trade the system.
Yes, if the platform is working, sometimes it mysteriously stops.
Do you, Malcolm, the two of you, Philip, you both believe in the idea that ordinary investors, private investors, can make money from the markets if they are well informed. The gentleman on the end here seems to think that basically we're all lambs to the slaughter.
Well, I think there is a factor of that, but a lot of this is oversold by the people that sell these education courses, promising a lot how you can do this in a weekend's education on this. And people leave the course and think, well, okay, we'll start doing this. I start doing this, and they haven't got the experience really in it. So you need to get the experience, build up the experience, have some test trades, etc. But until people have that and they know that, have got the experience, I think they really shouldn't be doing it, actually.
But is there not a wider thing that it's the matter of expectations here?
Well, there are.
People are doing things which are unwise because they believe that is the route to quick wealth.
Well, I think that's probably one of the factors a lot of people do it.
Well, this is a good point. The road to quick wealth...
There isn't one.
No, but the problem is a lot of people who spread bet think there is. Okay, and I again, if I compare short-term trading to long-term investing, the long-term investor is patient, but the short-term one is not. they lack patience. And that is the one problem with trading, because trading, you need to be patient. As I said earlier, there will be periods where things will not work out and you can lose money. But what happens normally is a lot of people will just go through a bad period, which I call a bad run. And because they are not patient, they will lose interest or maybe change and do something else.
But you're taking a lot of the major factor out of share trading for all of us, which is excitement. I'm not going to die of boredom waiting in the long term for BP to finally pick up. I mean, I want something that's going to give me 100% in a month.
Well, you pay for the entertainment, right?
I'm not paying. No, I'm making
you
money
are.
out of it. No,
Market pays you. Market pays you if it pays you in
full-time
entertainment.
trader. I'm a full-time trader, but that's boredom. I'm not interested in
I know, but
anybody interested in that? No.
But sometimes
it's where the money is.
Sometimes what is boring is rewarding. So it's no point to look for something exciting if you are going to lose money. It's better to look for something that is maybe not so exciting, but where you can make money.
Well, I'm not interested in losing money, that's for sure. That's worse than being boring.
Market
pays
you.
The thing is, you don't have to be, you can trade every day.
I think my view is that to succeed at short-term trading, there are three things really: patience, discipline, and having a plan.
I haven't got any of those.
And if you have those three...
So why am I here? Why am I not drawing benefits and, selling the big issue? I don't have any of those things. I mean, everybody
I've got
to his own.
£2 on me, I'm afraid. Market pays you to take risk, right? Market pays you to take risk. If you get paid in entertainment, you're going to get a lot less in cash, right? Value investors buy boring stuff that no one wants to own, and therefore they make great returns, right? If you want to trade short term, you've got to trade the microstructure of the market, and when it goes inefficient, you trade the market back to efficiency. And that's what the market pays you.
Sorry, what does that mean in English?
Okay, let me give an example, right?
Can you explain? Clem doesn't speak English.
I am a short-term futures trader. That's what I've done for 13 years. And I trade the relationship between two highly correlated markets. And I watch that relationship all day long, and I wait for inefficiencies to come along where certain larger orders have pushed that relationship out of line, and I try and put a trade on to say it's going to come back to where I expect the relationship to be. It's boring. I sit there all day long waiting for those situations to happen that can happen 2, 3, 4 times in a day or not at all in a day.
So you can quite possibly, to make money from trading, you could sit there, in theory, for weeks, not actually doing anything.
Well, I'm very short-term intraday, so I will lower my parameters for what I call an inefficiency, if that was the case. But I will generally trade every day, and I've been a successful, profitable trader.
But in theory, you could sit. In theory,
if my strategy was defined like that, and the winners were then big enough to pay for 3 months of sitting on the sideline, then yes, that would be how I would approach it. If you've got a strategy that works, trading does become boring because you sit there and wait for that edge, however you've defined it, to come along and you play enough of those edges. And if you've got a positive expectancy to your edge, it will pay off over time.
Are you saying then that you have a system, your working life does sound terribly tedious, but it is going to make you money, and the way that you're going to make money is because you have a tedious life and you're making it off people like Malcolm who are looking for his vicarious thrills and don't mind losing it?
To a certain extent, yes. I'm there to wait for those extremes in emotion.
It's not quite how I would put it, by the way.
I was paraphrasing on your behalf, Malcolm.
But Tom, he knows, he's got his knowledge, which is the correlation. He knows that correlation has been there, and it's going to be there, and should be there. And when some big institution breaks that, or someone fat fingers that, he takes the other side of the trade, and he pushes it back to where he knows it should be. Yep. He knows he makes money. If he thought there was a correlation, it would be 50-50, and every time he was right and wrong, he'd lose his spread until he lost all his money.
So it's guaranteed you'll make money on those things?
On odds, yeah.
Not on any particular trade, but my edge is defined enough and has been tested over a long enough time of real-life trading that I know that over time I will make money.
There's a lot of people, on the rare occasions when I sort of read bump from people about trading, they talk about having systems that work. Mm-hmm. Surely if there were systems that worked, then we'd all just sit there playing a system, and then the inefficiencies, I think that's the phrase that, was that the right word
That's
you used?
the right way, yeah.
The inefficiencies would sort of be ironed out, and eventually
Takes
we'd
about
make
3
a...
years.
So,
takes 3 years to do. Happen.
so
find
any
it goes in
anyone who
about
tells
3
me
years.
they've got a system, probably by the time I get around to adopting it, the inefficiencies will have been wiped out and it won't work.
Takes 3 years. 3 years, in my opinion. I've done 3 or 4 systems, and they last about 3 years. They're fat. They start to be not so fat. They start to get a bit skinny, get patchy. They don't happen very often, and then they drift away. Because 5 of people like him on my system, and that gap is no longer that big, because he's doing some of it too, and it gets skinnier and skinnier, and it disappears, and then maybe on a bad day it reappears, and then maybe only 3 or 4 times a month, and then once or twice every 6 months, and then gone.
Is there such a thing as what's your system, Malcolm?
I believe in sayings, and one of them is the trend is the friend. And if a share's going up, I buy it. And when I think it's stopped going up, there's a lull of a couple of days, I sell it. If a share's going down, I also sell it. If a share falls right to the bottom, I buy it. I'm after the dead cat bounce. After the dead cat bounce, I sell it. It's the trend is the friend is my only system, really. And run with winners and dump the losers, which is related. And if you do that all the time and keep your eyes on the screen, I also believe in something called Schrodinger's cat, which means you can put a few £100 into a share and see what happens to it. The Schrodinger's cat experiment was where they put a cat in a box and they left it for 6 months, and nobody could tell whether it was dead or alive. And when they lifted the box lid, it was alive. And that's what I like to do with some shares. It's a system I only work once in 100 times, but it's called Schrodinger's cat. I recommend it. Buy a few £100 in a penny share, close the box, forget about it. Next time you look, it's 300.
Or dead.
It's quantum physics. Look it up.
Thierry?
I think with regard to systems, there are so many systems out there. And I think that even if I give you a system and I say this is the best system in the world, there are still a large proportion of people who will not take it. Because I believe that people have their own idea about trading, and if what you offer them, the system you offer them, doesn't fit their idea, they will reject it, whether or not it makes money. And for that reason, there are always people who will take your system and trade your system, and some who will reject it. And therefore, the system can always work. If the system is working, it will work. I don't think it can... I don't think that the system will stop working because it's a profitable system. Because, as I said, people will always do something else. They won't necessarily follow that system.
Well, that's a good thing, isn't it? Because if everybody followed your system, we would all be losers.
Well, I don't want...
if everybody followed it.
I don't want too many people to follow my system because it would distort the result, But that's never happened.
Don't you think it's the Mavericks who in the end win out? Because we're not, if you follow the herd, you're only ever going to get a herd's average. You're only going to do as well as the foot.
Well, the simple, the most simple thing in the stock market is buying and selling. When I buy something, somebody else is selling it. So we have different views on the same thing. Same thing with a system.
But you talk about systems. Surely, why couldn't someone have their own system, and the system being, education and research? Why follow a system? Have your own system and research a share, research something, get some insight into something, and then you can say, that's my system. And if it works for you, then you don't have to go after someone else's system. And in that case, you maybe don't have to follow the herd.
It's the only way to go.
And the point is to get in there before the herd and then sell when the herd arrives. That's the main thing. Then you can only really do that if you have some insight into a particular stock. And you're only going to be able to do that if you carry out the research and due diligence on that. That's really when it comes to systems, why adopt someone's system? Have your own.
I think that's very valid. I've created systems in the past that have stopped working, but because I've created them, I know why they worked in the first place. I've been able to amend what I've been doing and return to profitability. Whereas if you're buying an off-the-shelf system that's being advertised, then if for all of a sudden the results don't match up to what you expect, you're left looking for the next system to buy, rather than understanding really why you were having positive.
I can't see why anybody would buy a system
No.
that someone would want to sell, because any system that a guy wants to buy is going to make such returns that nobody in their right mind would sell it.
Yeah.
Because it doesn't take many people to bugger up a system, because they'll just jump in front of you and they'll preempt your trigger, right? If you know that's the trigger, don't let anybody else have any of it. Be there. I mean, one of my systems, I had our broker. Our broker used to jump in front of me and knock me off the book.
But if you sell the FTSE and then tell everybody the FTSE's going to crash, does you a lot of good, doesn't it? So let them know. Let them know what the system is.
Well, the other thing about systems, and I go back to patience again, it's the same thing. You can give someone a good system, but any system, from time to time, any system will go through a bad run. And again, if the person is not patient, they will just abandon it, you see? Because I don't think, and I don't know any system that can make a profit every week, every month, every year. It's not possible.
It's called being a broker.
But if you have
Yes.
a simple system like
So
buying,
for that reason, there are always people who, they will drop, and they won't see the end result of the system because they've gone through a bad run, they stopped, and it's too late. They won't
but if
come
you
back.
had a basic system, say, I'm always going to buy banks, that's my system, what would have happened, in the credit crunch? You'd have
You'd
been
have lost
wiped
money.
out by using your system. So why not have lots of systems and adapt them to the change in the market? Not be patient and sit there waiting for your system to come right, but change it.
But isn't Thierry, but certainly you gentlemen here saying that actually some of the best trade thing you can do is just not to trade. If things are going totally against you, if there's no obvious opportunity, isn't the best trader the one who does it the least?
I think there's numerical trading going on here, and there's narrative trading. You trade the narrative.
Yeah,
We
momentum.
trade the numbers. Right? We don't give a monkeys about even the name of the thing or who said what. We don't care about that. We look at the numbers. If the numbers are out of whack, we take the other side of that. He says, words, what about banks? Banks, we don't give a monkeys. That number's done that. It shouldn't be there. We take the other side of that trade, push it back to where it should be. We don't care whether it's a bank or whether it's a retailer or whether it's gold or whether it's a Forex pair or whether it's a correlation of 3 or 4 different legs of 4 or 5 different things that all cross-correlate, and we're on the bid here and the offer there in another country. It's just numbers. Your system's a narrative, and our system's a numeric, and I think that's a big difference. And we wouldn't even say that was trading. We would just say we wouldn't recognise that, and in the same way as you wouldn't recognise my algorithms.
I wouldn't either, Malcolm. Don't
Yeah,
worry.
well, it's diversification, isn't it, across the whole panel. If we were all doing the same thing, the stock market would crash tomorrow, wouldn't it?
How does one reduce your risk? How do you become a low-risk trader? Starting at this end.
I think you need to define before you start how much you're prepared to risk, and diversification is key, especially if you're going to be investing in a range of shares. You spread your money, wide enough that one bad trade is not going to do too much damage, and you've got to structure things in a sensible way from a risk point of view.
Do you, in your heart of hearts, before I get the answer from everybody else, though, think that ultimately the private investor is always going to lose against you, the City Pro? Heart of hearts.
Heart of hearts, there are some people who are just naturally skilled at things. Some people, from a private investor point of view, will do very well.
Yeah.
Most people will generally fail at trading, not investing, trading.
Most people,
The-
you
the-
take this audience as a universe,
Yeah.
most people will end up giving their money to you. Because you'll be on the winning
people
side of the
like
trade,
yes.
and they'll be on the losing side.
Yeah, whereas if you take the money out from trading, where you are effectively, like Clem was saying, burning commissions and costs, if you can invest, you've got time and the natural inclination for the stock market to rise on your side, and that helps you. If you're going to trade, most people here will probably be net losers. The people that have got enough skill and emotional control will rise to the top, like in any endeavour. But in trading, it happens quicker.
And the emotional control is being able to sit back and not do a trade.
And also to take the loss when you don't want to take the loss, when you are sure you're right. That's the hardest one. You've got to still cut the loss because that's where your stop was.
How do you mitigate risk?
Well, you've certainly got to understand the pitfalls, really, and know what you're getting into. And once again, education comes back into this, because everyone knows you can be wiped out very, very quickly if you don't understand the risks involved. once again, it's education and knowing what you want to get out of it, but don't want to get too much out of it. So I would say really understand what you want out of it. Make sure you don't take too many risks. Make sure that you know exactly what you're doing, and speak to the people you might know who have done it before, really, who've been successful about it. Buy some books or something. But so many people will go into something after they've been maybe attended a seminar, thinking, oh, they know a lot about it, and start trading, and that's when things go wrong. And of course, know when to get out, really. Know when to take profits and things.
I would just say this: if you can't make money investing, you will lose all your money trading, right? So if you want to trade, invest. And when you're making good money at investing, then think about trading. You might be able to do that. But if you're not making money at investing, you will not hack it in trading. If you want to mitigate your risk, just check your Excel for bugs. Simple as that. If you haven't got an Excel that shows you why you're making money, how you're making money, don't even go there, right? And when you've got an Excel and it says, oh, if I do this trade in this particular way, I'm going to make this amount of return, check your Excel, keep checking it until you're absolutely sure that you haven't got a little bug in there. And remember, when you trade, you are actually, as my friend here will probably agree with me on, you're actually making markets. You're just a market maker. And people think that, you can speculate and da-da-da-da, but if you're going to make money, you'll find that you're actually making the market. And that's the only way to make money that I've seen in this market, is to make the market in the thing that you're trading. That's highly skilled. Focus on investing, and when you're making more than 25% a year in investing, you might think about trading after that.
Yeah. How does one mitigate risk?
Yeah, I think primarily it's just betting small. As I was saying earlier, some people take too much risk. They bet too much. If you are trading, then the maximum loss per trade should be probably 3 or 4% of your account, not more. That way, you will go far. There is another way to mitigate risk, and that is, for example, if you trade shares, and this is what I do, I will mix short position and long position. Because at any time, there is always a share to buy and a share to sell. Normally, most shares will go up the market. And this is true with the big companies like the FTSE companies, the FTSE FTSE 250 also. Those shares will follow the market higher. They are correlated to the market. But this doesn't matter because there is, as I said, there is always, even in a bull market, there is always a share to short. Obviously, it's a bit more risky because it could go up, but the idea is to balance the portfolio, having some long position and some short position. If tomorrow there is a crash, at least you are protected because those short position will make money. So that is a way to reduce risk.
Mal?
Well, to listen to my co-panelists, I'm not surprised. I rather expected you all to go home and never touch shares again. But, if you're a private share investor, you've got a lot of advantages that my friend at the end, who's very, very knowledgeable, and speaking to him earlier, doesn't take into account. One is the pressure is less. You're not dealing with other people's money, so you haven't got that. You don't have to watch the screen every second of the day going boggle-eyed and, drinking loads of coffee with the tension of it. And you don't have a boss sort of telling you what shares to trade in. It's all up to you. So if you make a mistake, it's easier to live with. And I've been doing shares ever since the Big Bang in '87. And I've had a lot of nasty losses, but I've had a lot of successes as well. For example, if you do penny shares, you've only got one to come in good as a 10-bagger, and it makes up for all those failures in between. So don't give up heart by listening to these people. You don't have to be a professional. You've got the maverick element. You can do what you like, say what you like, act when you like, go on holiday when you like, and you don't have the tension. You can read up, and I really recommend people to read up as much as they can, in the papers, books, all that. Get everybody else's ideas, work your own system if you like, but preferably everybody else's all at the same time, and just box and cocks. And in the end, you win, because the FTSE historically, all shares historically have gone up since the days of, of the Romans.
FTSE was pretty high back then.
They've all gone up. No, they've gone up. History shows it. Look it up. Don't believe me.
On that note, from the grandfather of share blogging, very good person at stuffing delegate bags. It's great help yesterday. I would encourage everybody always to be a maverick and to do and say what they want. Thank you very much to all 5 of you.